Cancel everything you planned for the next 48 hours because what just happened while you were sleeping will change the way you understand money forever. The financial system did not crash tonight. It flickered, and in the world of high-frequency trading, a flicker is more terrifying than an explosion. You were watching football, scrolling your phone, living your normal life, while the plumbing of the Western financial system started leaking something radioactive. Saturday night, January 31st, 2026. And the markets are closed, the floors are empty, but the data feeds are screaming in ways nobody on television is willing to explain. Something happened inside the CME group tonight that should be physically impossible if the system is actually solvent. The reporting went dark, not a power outage, not a server restart, but a complete information blackout on the most critical data in global finance. I pulled the issues and stops report, the holy grail that tracks physical metal movement, and what came back was silence, zeros, and timestamps frozen in the past. This blackout landed on the exact same weekend as the most violent price swings in silver history, and I stopped believing in coincidences a long time ago. The CME released a statement calling it technical reporting issues, which is corporate language for we have completely lost control of the ledger. What we are looking at right now is the digital fingerprint of something that has never happened before in the entire history of financial markets. Every single day, the CME publishes two critical data sets the system depends on. Volume tells how many contracts changed hands. Issues and stops tells how many resulted in physical metal leaving a vault. These two numbers must balance each other, always, without exception. For 2 weeks, volume suggests massive deliveries, but the issues and stops report shows nothing or impossible numbers. The CME is not a streaming service that buffers when traffic spikes. It is the central nervous system of global finance, spending billions on systems designed to make this blackout unthinkable. When a system this sophisticated goes dark on the same weekend as a historic delivery cycle, you are not looking at a coffee spill. You are looking at something being deliberately concealed. The consequences of data disappearing from this system are unfolding right now in real time. The arbitrage bots, algorithms scanning every market every millisecond, have gone completely silent. The spread between gold in New York and Mumbai has blown out to $283, a gap that should not survive a fraction of a second. Not a single high-frequency firm is touching this trade tonight. There's only one explanation for why a $283 free money opportunity sits untouched for 6 hours. The algorithms know buying the New York contract will never result in delivery because the vault is empty. The kill switch has been engaged because non-delivery risk is calculated as infinite. When arbitrage dies in precious metals, the bridge between paper and physical reality snaps permanently. We need to talk about Salt Typhoon, the master key to understanding why the data went dark. For 3 months, agencies tracked a state-sponsored group penetrating American critical infrastructure. They found Salt Typhoon inside telecom networks, power grids, water treatment facilities. The media called it prepositioning, but every analyst I spoke to this weekend says they missed the real target. The settlement layer, the invisible architecture determining who owns what metal sitting in which vault anywhere on Earth, is worth infinitely more to a hostile state actor than the entire power grid. A group that can manipulate the matching engine does not need tanks or missiles. It needs code and patience. Here's the theory causing emergency weekend meetings across Wall Street. What if Salt Typhoon did not hack the CME to destroy it, but to drain it, extracting metal while suppressing all reporting? The sophistication required is staggering but not impossible for a nation-state with months of access. You infiltrate the delivery algorithm, create a backdoor, and blind every reporting dashboard simultaneously. The vault releases the metal because every withdrawal order passes every internal security check designed to catch unauthorized access. But the dashboard that should be recording every movement has been fed false data, displaying levels that no longer match what is physically on the shelves. This is why the CME chose silence instead of publishing numbers that tell the story. An internal audit revealed a gap between records, and physical reality too enormous for any statement to cover. The technical issues statement is a shield, not an admission. It is the only narrative buying time without igniting a global run on every connected exchange. Hong Kong is the other half of this coordinated movement happening simultaneously on the opposite side of the world. Reports from traders across Asia confirm that HSBC Hong Kong and other major custodial vaults have frozen all physical operations this weekend without advance notice, withdrawing allocated silver returns one word: pending. Export shipments to London get the same answer. Emergency cybersecurity maintenance in progress. It reads like routine procedure until you examine the timing alongside Chicago. The Protection of Critical Infrastructure Ordinance entered full force in Hong Kong on January 1st, 2026. This law lets authorities freeze any critical infrastructure system during a declared cyber threat. Financial clearing and precious metals vaults are both explicitly named in the definition. Connect the sequence with absolute precision. Salt typhoon strikes the U.S. settlement layer, the CME goes dark, citing technical issues, and Hong Kong declares elevated cyber threat status on the exact same weekend. The ordinance activates, sealing every vault behind legislation no trader or bank can penetrate. The metal checks in, but does not check out. A roach motel for precious metals wearing national security as its costume. This is why the silver, spread between London and Hong Kong, exploded to $13. $13 is more than 10% of total silver price when norms place the spread at cents. The market is pricing in the permanent trapping of metal behind a digital iron curtain. The movement of precious metals between East and West has stopped completely overnight. Liquidity velocity has hit absolute zero across every channel connecting these markets. This is not a correction or volatility event. This is structural cardiac arrest. The blood-pumping liquidity to every extremity of the financial system has stopped moving entirely. Picture Monday morning from the perspective of every single short seller sitting inside this exact environment right now. You are a mid-sized hedge fund holding 500 short silver contracts. You rode the crash home on Friday feeling intelligent, and over the weekend the entire physical infrastructure supporting your ability to cover has vanished completely. You cannot acquire real metal because CME data is corrupted and Hong Kong is sealed by legislation. Buying paper contracts at whatever price the market demands is your only remaining option. Every short seller will reach this realization simultaneously Sunday night. They all hit buy at the same moment into a market where almost nobody is selling. The arbitrage bots are completely offline and silent. Dealers are locked behind maintenance protocols. Miners are deliberately withholding supply, and desperation is building across every trading desk on Earth right now. My prediction for the Sunday night electronic open is straightforward, and it is violent. Silver will gap up $15 to $20 in the first 10 minutes of trading, not gradually, but in a single explosive vertical move, representing the most honest price discovery precious metals have seen in 50 years. A darker possibility exists behind the volatility that we must examine without softening the language. Force majeure, the legal nuclear option suspending delivery and forcing cash settlement, is on the table. If the CME cannot reconcile its ledger, they can legally declare force majeure on every contract. They could pay you $90 for silver trading at $130 in Shanghai and call it settlement. This rug pull hides inside contractual language nobody reads until destruction arrives. It defaults the market without the word default and evaporates the squeeze overnight. The hack narrative makes this unchallengeable in court. The exchange becomes a victim of state aggression, and freezing withdrawals becomes a patriotic response instead of insolvency. If force majeure activates Monday, reality splits into two financial worlds permanently. The official price freezes, while physical silver reprices by raw supply and demand mathematics. Your brokerage would show one price, the dealer on the corner another. Paper and physical become separate economies that may never reconnect or speak the same language again. The most brutal lesson this weekend teaches is devastating in its simplicity. If you cannot hold it in your own physical hand, you do not truly own it. No other version of ownership survives what is happening. Every counterparty between you and your wealth is now a vulnerability that code can destroy overnight. The hack proved this conclusively in a single weekend. Digital ledgers can be manipulated, corrupted, switched off, or rewritten by anyone with access and motivation. This is no longer theory. It is happening in real time. You cannot hack a silver bar in your own safe. You cannot erase gold with code or access metal that has never touched a network. The $283 gold spread and $13 silver spread are not anomalies waiting to correct. They are the market's emergency broadcast at maximum volume. The market is telling you with absolute clarity that an ounce of metal sitting in your own physical possession is worth dramatically more than any digital promise of metal held by someone else. It is screaming at you to convert your paper claims into physical reality before the exits close permanently. We are entering a partition between paper and physical with no precedent in modern history. The West goes dark, the East seals its borders. Monday forces a violent reckoning. The truth the market hunts is simple and devastating. There's not enough physical metal to honor the paper promises issued against it over decades of fractional reserve banking. The hack did not create this shortage building silently for years. It switched off the lights, concealing the empty vaults from public view. Silver crashed $15 this week and turned green on the exact same trading day, an event that is completely unprecedented in the entire history of precious metals markets. Physical demand from China and India overwhelmed every paper manipulation attempt the institutions threw at it within hours. Institutions threw maximum bearish confluence, and the market absorbed it without flinching. Two $15 raids in 5 days, both reversed, proved the suppression playbook is permanently dead. The Shanghai premium has reached $26 per ounce and widens $3 to $6 daily. It is pulling metal east faster than the West can deliver or replace through mining. U.S. refineries locked up and stopped accepting shipments entirely. Coin shops are halting purchases as premiums explode beyond any historical norm. A major government mint is shutting down silver sales within 24 hours. First refineries, then coin shops, now sovereign mints. The infrastructure seizes in sequence. We have not reached the real squeeze yet. This is just physical dominance asserting itself over paper fiction. The main event will force mass short covering across every exchange. The big banks are revising gold targets dramatically higher in real time as they finally acknowledge what the physical market has been screaming for months. Goldman Sachs at $5,400, Deutsche Bank at $6,000, JP Morgan at $8,500, each major revision higher than the last as the fundamental case strengthens daily. Private investor allocation to precious metals is rising from 3% to 6% of portfolios. That represents hundreds of billions barely beginning to enter the market. Silver, with its smaller cap and industrial deficit, is leveraged to that capital flow more than any other asset. When gold moves 10%, silver moves 30 or 40. How long can the Shanghai premium stay at $26 before Western pricing loses credibility? How many more failed raids before banks accept control as passed permanently? What happens when the physical squeeze hits derivative markets and forces mass short covering? The mathematics says it happens soon and it happens violently. Do not let the salt typhoon headlines or the cybersecurity narratives distract you from the fundamental signal buried underneath all the noise. The vault is empty, the exits are closing one by one, and the only safe harbor remaining is the one you build with your own hands. The data is dark and the spread is growing wider by the hour. Nothing about Monday will be quiet or forgiving to those still unprepared. We are living through the historic transition from paper dominance to physical dominance in real time, and that transition does not ask permission from anyone. The moves will be violent in both directions and psychologically punishing, but the structural direction is permanently and irreversibly set. If you are trading on leverage, this environment will destroy you faster than you can process it. Survival requires understanding, not speculation. If you understand the currency debasement, supply deficit, Eastern demand, and derivative time bomb, this moment is the door opening. Walk through it now. The institutions are done fighting. They have exhausted every available ammunition. The manipulation machine is broken because physical reality is too powerful to contain. The squeeze is no longer approaching. It is here and accelerating beyond reversal. It will not stop until the mathematics of finite supply are completely satisfied. Get your metal out before the system stops pretending the metal was ever there. The truth is about to become the most expensive thing on Earth. This is the signal you waited for without knowing its shape. It arrives in silence, in dark screens, in spreads that defy mathematics. The hack revealed what was already broken beneath a surface that looked smooth only because the lights were on. Now the lights are off and the shelves are empty. Price is the final judge, and Price is about to speak with undeniable clarity. Listen carefully when the bells ring Monday morning. Every future dip will be shallower and shorter than the last. Time permanently favors holders now, and that shift is irreversible. The next move will not ask permission from any regulator or central bank. It arrives on its own timeline driven by mathematics no hand can slow. What follows this squeeze is repricing across every market connected to trust and value. Silver is only the first domino. The others are already leaning. Institutions understand privately what is coming and what it means for their short positions. Publicly, they remain silent, and silence in markets is always admission. The $15 crash will be remembered as confirmation of how desperate control had become. Desperation always precedes surrender. Silver did not merely survive the crash, it weaponized it, turning the attack into proof that destroyed institutional credibility forever. The squeeze is not coming. It is already here and accelerating. Reality always collects, and the market chose metal over promises permanently. The spread of $283 on gold and $13 on silver is the smoke billowing out from under the door, while institutions desperately fight the fire raging inside. You cannot see the flames directly, you cannot walk into the building, but you can smell the smoke, and every instinct should be telling you to run. Trust has been shattered beyond repair in a single weekend. Without trust, paper collapses, and paper is all that stands between the institutions and ruin. The cyber war has moved from theoretical to physical. It is no longer about stealing data, it is about stealing atoms. Monday morning is not simply a volatility event or a normal market open with elevated uncertainty. It is a crime scene investigation disguised as trading, and every spread holds the evidence. The CME will have to admit either the data is corrupted or the metal is missing. There is no third option available to them. If they publish real numbers, they reveal the vault is empty. If they stay silent, the spread keeps screaming the same truth louder every hour. The West has to hide the theft but cannot hide the price. The arbitrage bots already noticed the discrepancy. It is mathematically visible to anyone looking. The $283 gap is not an inefficiency. It is the market pricing in the theft, and smart money already knows the registered inventory number is a lie. Paper contracts in New York are now backed by nothing, claims on a vault that has been raided. The cyber war moved from screens to atoms in one weekend. The $283 spread cannot close by the U.S. price drifting up a few dollars over several sessions in an orderly fashion. It closes by the U.S. price exploding upward to match reality, or the U.S. market ceases to function as a pricing mechanism. We no longer have a single global price of gold, and we have a New York price, which is fake, and a Mumbai price, which is real. The U.S. market has become an island of irrelevance. The store advertising televisions at $10 with empty shelves. The price is a ghost. When the electronic markets open Sunday night, price cannot drift higher gradually. It has to teleport. The valve is welded shut, and pressure has nowhere to go. The first trade, Sunday night, will not be speculation. It will be covering panic, and every covering panic hits the same button at the same time. We could see a vertical green line that looks like a system glitch, but it will be the most truthful price the market has printed in 50 years. The market chose metal over promises, and that choice is permanent. Reality always collects, the game is over, and the squeeze has already begun.